Hey everyone, welcome back to Iraqi Dinar Hub. We're retracking what may be one of the most intense waves of discussion we've encountered all year. A strong surge of speculation is moving rapidly across the community, and it is focused almost entirely on one major name Chase Bank. Over the last several days and weeks, the pace of chatter has increased sharply, with new claims suggesting a possible exchange limit tied to the Iraqi dinar. If there is any substance to these circulating reports, it may point to something meaningful, taking shape behind the scenes. But this is where everything becomes especially important, while many are watching this story with heightened attention. Equally strong warnings are urging everyone to slow down, wait, and avoid racing to the banks. Before decisions are made based on speculation, it's critical to understand the full context. Today, we're going to break down the narrative from every angle. We'll cover what is allegedly happening at Chase, what these rumored exchange caps might imply, and the reasons so many are advising caution. We also look at how timing could dramatically shape the outcome for individuals if such an event were to activate. Recent online discussion has surged with new claims about Chase Bank's internal systems supposedly showing updated activity related to the dinar. Many online sources are circulating claims that the dinar has reappeared inside Chase's live foreign currency tools, which is noteworthy by itself. But this time, the currency is reportedly accompanied by a specific limit, and that detail is what has sparked this latest round of intense analysis. At first glance, a cap might seem insignificant. But anyone who has tracked this story over the years knows how meaningful it could be. When a major U.S. institution, especially one of the nation's largest, begins making operational adjustments linked to a specific currency, it's almost never random. It usually indicates the bank is preparing its systems for something. Whether that preparation is internal testing, broad system updates, or as the speculation suggests, a setup for potential market activity, it points to purposeful action. The deeper takeaway from these circulating claims, regardless of their accuracy, is that something seems to be shifting inside the infrastructure of one of America's most influential banking networks. And every one of these alleged changes is connected to the Iraqi dinar. So let's break down why Chase plays such a central role in this discussion. Chase is not just another everyday bank. It is one of the world's most interconnected financial institutions. It works closely with the U.S. Treasury, handles massive volumes of global transactions, and manages extensive foreign exchange operations. Because of its position in the international financial system, any internal change involving the dinar is viewed by many as a major indicator. The idea is that the underlying systems for a possible future exchange scenario may be undergoing preparation, testing, or configuration right now. Think about this from a purely operational standpoint. No major bank invests money, staff time, or internal resources into programming limits, refreshing currency settings, or adjusting foreign exchange frameworks unless it serves a real purpose. These internal updates cost money, they require approval, they require coordination, and they rarely occur unless a bank's risk and operations teams expect potential movement or are instructed to prepare for a new set of conditions. That is why the reported activity is drawing so much attention within the community. Many are trying to interpret what these updates might signal about future events. Let's look more closely at what is being claimed. According to various circulating reports, the rumored exchange limit at Chase is roughly $1 million worth of currency per customer. It is essential to emphasize that this number comes from speculation and may differ significantly depending on the type of account. Some of the chatter suggests that private banking or high-net-worth clients could see higher or alternative thresholds, whereas standard account holders might face lower caps. This tiered approach is common across financial institutions and used to manage risk between different customer categories. Whether the exact numbers are correct or not, the concept of a tiered limit system is entirely consistent with how large banks operate. If the dinar were suddenly to revalue, banks would be required to tightly manage liquidity during the initial phase. That means controlling how much money is exchanged early on to avoid overwhelming the system or creating instability. In that sense, these rumored limits of real could be part of a responsible plan, rather than a restrictive one. In fact, many view such limits as possible evidence that preparations are legitimate. When banks set caps, they typically do so because they foresee real activity, not hypothetical scenarios. It's a necessary part of managing the flow of transactions responsibly. Think of it like traffic control on a newly opened freeway. If every dinar holder in the country ran to exchange all at once, the system would immediately overload. Limits prevent that from happening and allow banks to process exchanges smoothly. This is essential for several reasons. It gives banks time to verify currency authenticity, which is crucial given how long the dinar has been out of broad circulation. It also helps preserve liquidity so the bank isn't drained by an initial surge of exchanges. Ultimately, this protects both customers and the broader financial system. The goal, therefore, isn't to block exchanges, but to ensure that the process unfolds in an orderly manner. And again, if Chase really is establishing operational limits for the dinar, it signals that the currency is being recognized within some part of the system. But with all this speculation comes a very important caution. Many experienced researchers in the community, which includes people who have followed this subject for years, are strongly urging patience. They warn that if a revaluation or major rate shift occurs, the first available exchange rate may not reflect the final international rate. In simple terms, being first through the door may not provide the best return. Some believe the initial rate could be transitional or controlled before the dinar stabilizes on global markets. If so, those who rush to exchange immediately could miss out on the full value that might appear later. The smarter move, according to these warnings, may be to wait for the market to settle and official sources to confirm final arrangements. Timing could be everything. Let us step back and examine the broader developments inside Iraq that may be fueling this escalation of rumors. The Central Bank of Iraq has been implementing extensive reforms aimed at modernizing its financial system. They've been upgrading digital infrastructure, strengthening oversight of international transactions, and improving anti-money laundering frameworks. A major part of this modernization involves aligning Iraq's financial operations with global standards such as ISO 20022, which is required for full international integration. These upgrades are not superficial. They represent a deep structural transformation of Iraq's banking environment. At the same time, the Iraqi government and central bank have been clear about their long-term goal: to re-establish the dinar as the dominant currency inside Iraq, and even in some regional trade. Reducing reliance on the US dollar for domestic transactions would be a major step toward achieving currency stability and possibly higher valuation. These reforms form part of a much larger modernization plan, preparing Iraq to reintegrate fully with global financial markets. Many of their public targets align with progress expected through 2025. As Iraq advances its internal reforms, major U.S. banks naturally must prepare as well. International systems must remain interoperable. If Iraq activates an internationally recognized monetary framework, U.S. banks must be ready to process transactions, ensure compliance, and manage liquidity. Chase Bank, given its global reach, would almost certainly play a significant role. Their systems already handle numerous foreign currencies daily, so adjusting their infrastructure is part of operational readiness. When reports emerge suggesting IQD updates inside their system, many interpret it as preparation rather than coincidence. And the timing appears to align closely with Iraq's public reform schedule. This alignment is why many observers are so intrigued. Now let's break down what an exchange limit actually accomplishes. For a bank like Chase, the purpose is simple: control and risk management. When a newly valued currency becomes active, volatility is high, and institutions must protect their operations. Banks have to verify every note to prevent fraud, especially with a currency that has been handled outside traditional channels for many years. They also need to prevent massive withdrawals or exchanges from hitting their liquidity at once. Limits ensure that transactions move at a manageable pace. For example, if customers can only exchange up to a preset amount in the early stages, the bank can gradually process those transactions without destabilizing their reserves. Once the initial wave subsides and systems adapt to the new conditions, those limits can be raised or removed. In that sense, limits serve as a safety valve rather than a barrier. They help ensure a smooth and secure process for everyone involved. But the big question many are asking remains: does this chatter mean the RV is happening immediately? The most responsible answer is not necessarily. What it does indicate, if the reports are accurate, is that major institutions appear to be preparing for the possibility.